Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Hope everyone had a wonderful weekend. It is Sunday afternoon, about 2 p.m. Eastern, November 24th, and this is a deep dive technical analysis review of the stock markets, cryptocurrencies, Bitcoin, precious metals, trade ideas, and of course our mechanical trading systems, like you see our S&P 500 KISS trading system. Okay. Again, I'm Matthew Frailey, founded Breakpoint Trades 21 years ago back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is my personal passion. We put out 5 detailed newsletters a week, actionable trade ideas, have an active community. Of course, we have all these mechanical trading systems, and pretty amazing gains here with a lot of these systems. Here's some of our KISS systems. These are real trades, awesome gains there. Anyway, let's go ahead and get back to this newsletter at hand. This is our back-end recorder for our website subscription service. Our newsletters we put out in a web page audio-based format. I put a couple YouTube videos a week, as you know, but I'm going to go ahead and get this recording started now. And again, guys, if you are not a subscriber to Breakpoint Trades, consider doing so. And especially this week with Black Friday, etc. We'll be sending out some information on that, but let's get started here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Hope everyone had a wonderful weekend. It is Sunday afternoon, about 3 p.m. Eastern Standard Time. Of course, this is the detailed weekend newsletter for Thanksgiving week, 2024 to 2029. Okay. Again, it's going to be a shortened holiday week, as you know, for the U.S. markets. U.S. markets are closed on Thursday for Thanksgiving, and they trade half a day on Friday. All right. Again, if you're happen to be new to Breakpoint Trades, these weekend newsletters in particular tend to be quite long, anywhere from 40 minutes to close to an hour. These aren't made for the TikTok folks who can only focus for 1 minute. These go into a deep dive technical analysis of dozens and dozens of charts. It's a good place to learn, and etc. Anyway, this weekend newsletter is divided into 6 major sections. Same theme as I always keep. I have my opening statement here. Then we're going to talk about some of the mechanical systems that have open trades. Then we'll go and move back to the general market analysis. We always do a top-down approach on the major indexes, S&P 500, triple Qs, IWM small caps, from monthly, weekly, down to intraday time frames. We'll look at a few market indicators. We'll look at the bond market, 10-year treasury yield. We'll look at major sectors. We're going to look at the US dollar, Japanese yen, Bitcoin, which is almost tagged 100,000. It got just a couple hundred points away. Precious metals, gold, silver, GDX, mining stocks, and of course, followed up with trade ideas. Now, as far as the market, as far as all the market's pretty much uptrending in all these time frames. Short term, we had a pullback from the November 11th high. Most of the indexes bounced off their respective 20-day moving averages. That said, the S&P is nearing a small resistance zone. Will it form a lower high or not here remains to be questioned. That said, we are into Thanksgiving week. Market typically does well during the Thanksgiving week. I went ahead and looked up some historical stats here. This is from Yahoo Finance. So if you look here, a lot of times Mondays can be a little down day, and sometimes Tuesdays. Generally, the market in Thanksgiving is up on Wednesday and, of course, the Friday. So if we're going to have a little weakness this week, it could be on Monday and Tuesday. Again, just from a historical, statistical standpoint. All right, let's go and move back to the systems. So here we have some of these open trading systems. So this image here shows you the SPY mean reversion systems. We run 21 mean reversion systems across the SPY, ETF, and MES futures. Now, the ES futures don't have any open trades, but on the SPY, we still have this open breakout trade. There's been a first and second entry. Those trades are still open. You can see the stops here. By the way, the stop is roughly equivalent to the second entry. All right. And there's no changes here, but otherwise you can see the trades this year. There's been 25 trades on the SPY system. There's been more on the ES systems. But otherwise, they've done a good job. They've been fairly quiet this year because of the low volatility. In bear market years, such as 2021, these may do 3 to 4 times the number of trades. Mean reversion trades love volatility, or systems love volatility. So in bear markets, sideways markets, you get a lot more trades. When the market's just uptrending relentlessly, you don't get a lot of mean reversion systems triggering, which is fine. But that's where our KISS systems come in because they are trend following. They're designed to keep you in uptrends for as long as possible with a smart trailing stop to protect you. So let's take a look at those. Image number 3. So here's just the standard. So on the KISS systems area, when you go to systems, you have all these various baskets. Okay, we have the free basket, which if you're not a subscriber to the KISS systems, you get that and you get emails for that. But to get access all these other baskets, you need to subscribe. So here's the standard daily basket. And again, you can see here, there's very nice trades, right? Bido, that's Bitcoin's up about 30%. IWM, Nvidia, Mara, AT&T, Tesla, some really nice trades here. You can see Amazon closed out on Friday for a 5.4% gain. Again, these are all real trades, guys. These aren't back tested. These have been live for a couple years now. We also have weekly versions of those KISS systems. To me, I usually don't trade the weekly myself. They're kind of almost like paint dry. They can hold trades for sometimes 1 or 2 years. They're more for very non-active traders, maybe retired folks who want to play golf all day, but they still want some sort of protection on the market. They want to be in the uptrends and bull markets, but they don't want to be protected from a bear market. These will do so, but heck of trades on these weekly KISS systems. Take a look at these. Look at these gains here. Here's Nvidia KISS system weekly went long back on October 28, 2022. That trades up 930%. Still in. Current stop is 108.70. And, in Meta up 274%, Tesla up 36%, DIA 25%, gold up almost 35%, AVGO, that's Broadcom, up 196%. So crazy gains on these weeklies. And then finally, what I like to trade are the high performance systems. These are cool because a lot of these are intraday based, 78-minute, 130-minute. Even though they're intraday, a lot of these can still hold trades for several weeks or longer at a time. So they're not day trade systems, most of these. And look at these nice gains here. These are all real gains. GBTC, that's a Bitcoin's up 58%. It went long on October 10th or 11th. IBIT, that's another Bitcoin. Tesla, 40.9%. Just heck of gains here. The nice thing about the high performance is that they're a little more active. They have higher performance than the daily systems, and you can get notified via SMS text messages. So that'll send you a text message to your phone whenever one of your favorites takes a trade, tells you where to enter, tells you when to place a stop, etc. So pretty cool stuff. I'm surprised more of you aren't using this valuable resource, but I think more of you are going to come aboard on time. It's pretty cool stuff, and it's only going to get better over time. But anyway, enough of the systems. Let's go ahead and move back to the general market newsletter at hand. So image number 6 shows the index sector table, what transpired last week. You can see nice gain on the indexes on Friday. Nice gains for the week with the Russell clearly leading up 4.5%. The Russell came basically pulled back and rallied right off the previous resistance, which became support. But otherwise, nice gains here across the board prior to the Thanksgiving week. As far as the 21 market sectors, pretty broad-based rally here. All 21 sectors were up. So broad-based rally there. Currency-wise, well, even the dollar had another nice week, up 0.83%. The dollar's had one massive rally off that October low where it had a fifth wave divergence. Just a massive move. Cryptocurrencies, of course, up 10.7% for the week. It hit 99. This is updated from the other day. I think it hit 99,800. So it got really, really damn close to 100,000. And commodities, well, very broad-based rally as well. Everything up except for sugar, which I highly doubt any of you are trading that. I'm certainly not. Crude oil up 6.5%. The index, DBC up 3.4%. Uranium up 9.3%. Agriculture up 2%. Coffee up 7.4%. Don't tell Starbucks. they'll raise your prices. Gold, big rebound, up 5.6%. Silver up 3.25%. GDX, the miners, up 7.8%. The question now on this area is gold going to form a lower high and then come down again? I would certainly favor that, but we'll see. And as far as the bond market, pulled back last week on the 10-year, 30-year, and of course, the yield curve is still positive, but it's pulled back quite a bit. And finally, image number 7 shows the economic news calendar. So not a lot of news this week. As you know, we have PCE inflation data on the 27th. And again, not a lot of things here, guys. Like I said, the market is closed on Thursday. It is open on Friday for half a day. And of course, other news, you got to be aware of the geopolitical, anything out of left field that could come out of Russia, Ukraine, all this talk about possible nuclear weapons. That's always an issue that could come out of left field, so be aware of that. Okay, let's go and jump to the charts here. So first off, we're going to start with just these basic charts. Here's the weekly charts of the 5 major indexes, the S&P, Dow, NASDAQ, Russell. So after the previous week sell-off, last week we had a nice rebound, as you can see. The S&P still not back to its highs, same for the NASDAQ and the Russell, but nice rebounds last week, as you can see. Next, chart number 9, here's the monthly view. Again, indexes are having once again, a nice move for November. The Dow itself is up over 6% in November alone. Nice big candles. This bull market uptrend or secular bull market from the 2009 lows continues. Of course, you can see on the Russell here how just a beautiful example of technical analysis. Had resistance back here, 2018-19, which once broken became support on both of those back tests. Those are honestly, those back tests of previous resistance areas are your much more objective trade entries because you have a very tight stop. Next, chart number 10, here's the daily view of the index. So again, we've had a correction over the last week and a half. As you can see, a lot of these indexes pulled back to their simple 20-day moving averages, middle Bollinger Bands, and have bounced. The Dow is almost back to its highs. The S&P and NASDAQ are not. You can see the Russell here again. Just beautiful. Ascending triangle, breakout, back test, rally again. That back test was a great area. Hope some of you guys took advantage of that and went long. Moving on to the KISS system. So here's the weekly KISS systems, which I briefly discussed in the opening video. So again, these are kind of like paint dry. They can hold for years at a time. So here's the S&P up here in the upper left. You can see it went long back in early 2023, and it's still long. Okay, current stop is 54.90. All right, quite a bit of wider stop than the daily KISS, which you would expect. Okay, there's the Qs, IWM small caps, and DIA. So these have all been long for quite a long time, which you'd expect. Next, chart number 12, here's the daily KISS system for the S&P. So much tighter stop, almost at 5,800. Again, you can see just a beautiful system going long back in late October 2023, catching that first good run. Got out for a little bit in April, got back in early May, had another run. Stayed out of some of that correction into August, got back long, and it's been long since. Just a great example of the KISS systems. Now, you might ask, well, why would I bother even getting out and back in? Well, sometimes, guys, you're going to have a much bigger correction than this. What about flash crashes or when the market has a 20% or 30% correction? Do you want to ride that down? That's where the KISS system would excel at. It would avoid that and then get back in at much better prices. The other thing about these systems, I just love this moving average ribbon with the BPTMA Deluxe. Just a really cool guide. You can see how here it's just BPTMA just pulling back into the ribbon, rebounding off of it every time. Next, chart number 13, here's the 4 time frames we like to follow. So here's the daily in the upper left. We had that resistance cycle where we pulled back from, we held the ATR. Coming back up to it, we'll see how we react there. Can we make another high here or do we make a lower high? Here's the half-day chart. Price has really been following that well. Nice pullback on the resistance cycle, the Mark 9, bounce off the support cycle. Now we're testing the ATR underside resistance. Moving back to the standard charts. So again, start with the bigger picture. Here's the monthly chart. Kind of like my big picture chart, KISS chart. We've been in a secular bull market since the March 2009 bottom. So we've been in a secular bull market for almost 16 years now. By the way, secular bull markets tend to last anywhere from, roughly 16 years to 23 years, 25 years. So we'll see. Eventually this will end, but when it ends, we'll see. Very cool guide though, this big long-term chart, especially this 14 stochastic. Whenever it falls below 50%, that tends to identify your bear markets. Obviously, it's a long way away from that, but it's been a very good guide here in the long term. Next, chart number 15. Here's another good guide, and I'm not a big fan really usually of moving average cross systems because they tend to lag a lot. But this monthly chart using an 8 and 13 EMAs crossover, those are fib numbers. As you can see, they've done a damn good job about catching the major bull and bear markets, keeping you out of the 2008 bear market, out of the 2000 tech crash, and keeping you in that secular bull market. Okay. You can see they crossed in 2022. That was a little bear market, but then righted themselves, crossing right back in early 2023, and it's been off to the races. That said, just looking at the moving averages here, they are getting a bit wide, so eventually we're going to need a pull in, right? You can see this channel, perhaps the upper channel line could be a good resistance area. Here's some other charts. Here's another monthly chart, again showing the 2009 secular bear market bottom. So one interesting thing, and we've been showing this the last couple weeks, you could count this as the final wave of 5 of 5, possibly completing this whole secular bull market. Again, it's way too early to show this, conclude anything, guys. It's subject to adjustments, but I just wanted to point it out here that we could be working on this wave 5 of 5. Perhaps if we were to push up here and tag the upper channel line, parallel channel line, maybe that's a good area to finally have a nice correction. Chart number 17, here is a weekly view. Again, after last week's sell-off, nice bounce back. You can see the demand zone below. So we still have the MACD divergence here, but again, remember, divergence is never a sell signal on its own. We've just been uptrending. So we'll see how it does the rest of the year. And chart number 18, here's a simple chart. Steve showed this the other week, but all he's showing here is on the weekly S&P. So the 89-week moving average, that's another fib number. If you look here, it's been important support and resistance. You could see back here, with support, broken became resistance, broken became support. The point we're trying to show here, there's quite a bit of distance here between the 89-week MA. Eventually, price will need to have a mean reversion and get closer to this. Again, when that occurs, is it soon? Is it next year? We'll see, but eventually that will occur. Chart number 19, here's another weekly chart. It just shows you this kind of wave count that we've been following. Again, we possibly are in a wave 5 of 5 here, just to take note. And chart number 20, here's another weekly chart showing some of these wave counts as well. Should we complete, another variation could be we're completing a wave 5 of 3. When this completes, we'll have a deeper 4 pullback, which could pull back all the way to 23.6 to 38.2% fibs. 5,400 on the S&P to 5048, 5050, whatever. So that's another option, is once this completes, pull back to there, a nice pullback. That would be a pretty good haircut, but then you get another rally as a wave 5. So those are some options, guys. Again, don't get too bogged down into these. This is the weekend, so it's a good time to review these things. Intra-week, no reason to look at some of these bigger picture charts. All right. Now let's move down to the smaller time frames. Here's the daily S&P, just a clean chart. So back in July, August, we had that perfect 3-wave ABC pullback that we identified. We've been moving up since. Here's an uptrend line you can draw from the August lows. Notice how the 50-day moving average in red comes in right around the trend line. So last week we held support at the 50-day or 20-day moving average there in blue. Rallying back, there was a gap we filled. Now, do we rally back to a new high here, or do we pull back? We'll see. Chart number 22, here's another chart just showing some of these variations of these counts. One, if we don't make a higher high here, we could have completed a little 5 of C. And chart number 23, here's the most bullish view where we've literally had a little wave 2 pullback and we're going to go up in a wave 3. It essentially a nested 1 2 1 2. So again, we'll see which option favors. I mean, we're uptrending, so you probably have to favor the bulls, but really you need to take out this recent high, obviously. And of course, hold this uptrend channel. Next, chart number 24, here's the 2-hour view. Go last week. So there's a couple gaps here. First off, we filled one gap to the upside. We're now into a little supply zone above. See that? We have a big open gap below as well that is unfilled. So be aware of that. Chart number 25, here's a 60-minute view. Now this has both bullish and bearish counts on it. So the bearish count is in red. So that whole pullback would have been a wave 1. We're going to form a lower high as a wave 2, B, and then come down again. All right. The bullish view would be a nested 1 2. You can see it here. 1 2 1 2 3. Notice this downtrend line I could draw from the 60-17 highs. So that's something to keep an eye on, guys. And chart number 26, here's the bearish view showing that wave, possible wave 2. Again, for that to play out, you need to form a lower high. And chart number 27, here is a 15-minute view. First off, again, you can see the downtrend line from the 617 high connecting the 6008 high. So that if we pop a little bit early this week, watch that trend line. Could be an area to pause. This here would be the corrective count. Steve added this where we could, maybe we push up and form a lower high wave Y. But whatever, again, don't get too bogged down into that. Got a little ascending triangle here in the very short term from Friday. We'll see if that can pop or not, and then watch that downtrend line. Okay, moving on. Moving on to the NASDAQ, here's the triple Qs. This is the KISS system, obviously still long as well, just like the daily S&P. Current smart trailing stop bumped up last week to 492. Pretty nice tight stop. Image number 29, here's the 4 time frames. The daily up on the upper left, very similar to the S&P, how we pull back from the cycle. Bounced off the ATR for now, still lower high in place. The 195-minute has me intrigued. If you look here, again, these are the cycle indicator. The buy cycle in cyan, resistance cycle in magenta. And notice how price has really been perfectly ping-ponging between these cycles. So whenever that happens, I really like to take notice of it. Okay. Eventually, once this breaks through one of the cycles, that typically starts a trending move. So that's why I'm going to keep an eye on this. But otherwise, little ATR resistance just above. Next, chart number 30. Here's the moving back to the standard charts. Here's the weekly Qs. Again, up 1.8% for the week. This is you can see the weekly wave count here. We're potentially working on this wave 5. Notice you have the MACD divergence. Again, does this wave 5 it could complete now, or since we're in this typical bullish time of year, does it push higher and wave 5 wait to complete in early 2025? We'll see, but it does look like a wave 5 here. We'll see where it ends. Just be aware of that. Chart number 31, here's the daily chart. Again, got this uptrend line from the September lows. There's a bigger demand zone below. We're into this gap. We didn't quite fill it. The S&P did fill its gap. Chart number 32, here's a 2-hour view. Again, you can see these gaps. We still have this open gap above we haven't quite filled. We have an open gap below. All right. We have a little coil here in the short term. Next, chart number 33, here's a 30-minute view. Again, shows you the gap. Didn't quite fill the one above. There's one below. We got a little coil intraday here. Can we pop up? If we do pop up and fill this gap, notice the supply zone above. And if the market decides to sell off, there's an open gap below. And chart number 34, here's a 15-minute chart. Shows you that nice coil there that's set up from Thursday and Friday. There's still that little open gap above. Okay. Moving on, chart number 35, here's IWM small caps. Again, just love this chart. Absolute textbook action. We had this ascending triangle drawn. Then it popped out of this, pulled back tested the top of the triangle, which became support. That was an extremely low risk area to go long, guys. I love those back tests. Nice rally here. This was the strongest index this week. And chart 36, here's the 2-hour view. You had some nice divergence here at the 61 fib. Nice rally. Now there is a little supply zone this is in, so this could still technically form a lower high. Just be aware. All right. And that does it for the indexes, guys. Let's go ahead and move on. So chart 37, here's the VIX. So the VIX pulling back here late last week from that middle Bollinger Bands. Now clearly that last VIX Bollinger Band signal, when it was below the lower Bollinger Bands, it closed back inside. They gave a nice sell signal, you know, if you took profits at that 20-day moving average. Okay, been a lot of nice signals on the on the VIX Bollinger Band system this year. Most of them have been buy signals, as you can see, though. Next, chart 38. Here's the 60-minute view of the VIX. I like the 60-minute view because the VIX really likes to fill these gaps, even more so than the index. As you can see, all the gaps previously have been filled. Now there's still a couple open gaps here. It got well into this gap above, started selling off. Now there's a gap below. So if the market decides to have a decent week for Thanksgiving, maybe it fills this next gap. And finally, chart 39, here's the NYAD. That's the advanced decline issues. It's breadth indicator versus the S&P. So at those November highs, we did have a lower high on this versus a higher high in the S&P, and it did produce a pullback, but now we're bouncing again. All right, let's do a quick look at the market sectors here. So just to show you how things look like under the surface, or here's XLK technology. So now you could draw this as a potential wedge, and you could draw it as a completed wedge. Okay, we basically filled this little gap, but again, the important thing here is the bulls need to hold this uptrend line and 50-day moving average. Okay, if they break this, that would likely start a correction in the market. Chart 41, here's the semiconductors. Now this broke down, then it's bounced back a little bit after NVIDIA earnings, but this area needs to improve as well. Semiconductors have been quite weak. Here I noted the next demand zone below. Again, if semiconductors start selling off, that wouldn't be good for the market. Now other areas have been doing extremely well. Here's financials. Remember, we had this ascending triangle back here in October, then a bull flag. And recent bounced off the 9 EMA here. Good volume patterns, making a new high again. Here's the banks. BKX just continues to rally up. Bounced off its 9 EMA last week. Beautiful textbook ascending triangle back here that we pointed out. At the time, I issued some bank stocks for trade ideas and some ETFs like KWEB, which all done great. FAS, triple financials. Chart 44, here's IYT Transports. Again, they continue to be in a nice uptrend, bouncing last week. Chart 45, XRT Retail. Now this is a weekly chart, but you can see it's breaking out of a little resistance zone here. There's a supply zone above here. Maybe it just rallies up into there. Again, Black Friday coming. We'll see if retail can push up. Chart 46, here's Consumer Staples. They've had a nice correction from the September highs. But so far, like in a 3-wave into support. This was previous resistance, became support. And then we had a little wedge here, which we broke out of. So nice move out of that. Looks good. Chart 47, Materials. Had a nice correction as well, but bouncing near the 200-day moving average, coming back up. Now we'll see the 50-day moving average here. Chart 48, Biotech. Got absolutely pummeled, especially on that Kennedy pick. But it's bouncing back here. We went long. LABU down here is an oversold bounce play, and it's had a nice move up here. That said, I am expecting resistance up in this area. Okay, I see one wave down and one wave up. Corrections are generally at least 3 waves, so watch for this area to be resistance. Chart 49, here's healthcare. This has also been downtrending. Possible at a little wave 5 of 3 down here, bouncing in a wave 4, but it is downtrending, guys. You can see we're well below the 200-day, 20-day, and 50-day. Chart 50, here's XLI Industrials. Again, note you can count, it's uptrending very strongly. Note you can count 5 waves, but as I said, you know, this could have just been a wave 2 of 5, so wave 5 could be shifted over to here. Again, should this make a new high, that would be the case. Chart 51, IYR Real Estate, bouncing as well. Here's a channel to monitor, obviously dependent on rates. Chart 52, XLE Energy. It's been in a nice long consolidation this year. It's had a nice move up here. It's now at the top of this range. Chart 53, here's the weekly chart. Again, I've loved this weekly coil. I've been showing this over the last month. Had a nice breakout and it's been pushing higher. Here's oil services. They haven't been as strong as energy, but you can see slightly breaking out of this channel. It's right around its 200-day moving average now. And here's the weekly chart. Oil services did find support, this demand zone and weekly uptrend line. Again, Trump administration, they're typically, friendly to the energy market, so we'll see if these areas end up having a bull market move or not. And let's move on to commodities, guys, which all had a great move as well. Here's DBC, that's the index, up 3.4%. Remember, it's been in this consolidation here for a couple of years. Chart 57, here's the monthly view. So again, you can see this coil that's been developing here. Honestly, and you can see the MACD divergence. The MACD has been recycling back to zero. Honestly, this looks like it's setting up for an eventual big breakout. Wonder what that'll do to inflation. Look at your moving average ribbon pinching as well. And chart 58, here's the daily chart. Actually, you could draw a little downtrend line here, which I didn't do, but... And here's another interesting chart. This is DBC SPY ratio. So obviously the S&P 500 has been doing better than commodities for the long term, except for some of these times. But interestingly, you do have a big wedge forming here. So on a breakout, that could signal that market is finally going to enter a pretty good pullback and commodities could really start going higher. Wouldn't be good for inflation either. Chart 60, here's crude oil up 6.5% for the week, otherwise still in this big pattern that we've been showing all year long. Chart 61, here's the daily chart. Again, bouncing off that little double bottom support. Just a lot of chop here, quite honestly. Again, the stocks have done much better. XLE Energy, oil services, much stronger than crude on the daily. Next, chart 62, UNG natural gas. Remember this bull wedge I showed a couple weeks ago? Played out for a nice trade, but hope you guys took profits at that 200-day moving average. Rejected once again there. It's been stalling there all year long. So that was the place to take profits. Chart 63, here's copper, down about 1% on Friday. Still downtrending here. Chart 64, DBA, agriculture ETF, continues moving higher. We've had a simple ABC pullback, so this is uptrending nicely. KISS High Performance Systems been long this too. Next, chart 65, here's coffee. Now this is a monthly chart. It is up almost 23% for the month. Here's the all-time highs up here around $3, $3.18 for the commodity. So it's trading at the upper end of the range. I'm sure Starbucks will use that to raise your latte prices. And here's the weekly chart, just uptrending. Nice breakout from that little wedge flag the last couple weeks. Chart 67, uranium. This is the daily chart. Small break from that pattern here. And here is the bigger picture of uranium. Again, uranium is in a secular bull market. It started in this 2020, coming out of this long-term base. Had an initial move up, then a nice consolidation into a coil, broke out again in 2023. And it is uptrending again. Maybe the next target is up into here. Okay. Look at the RSI. See how that 50% area and downtrends became resistance. Then once it broke it, it became support. Next, chart 69, palladium. This had an initial nice move off this support low, which I talked about. Pulled back off the supply zone. That was the place to take profits. Now I'm watching to see if we can form a higher low again. Chart 70, platinum, still in this big monthly coil. It's a 4-year coil. So nowhere close to breaking this, but this is something we do want to watch over time. Now let's move to the bond market. Chart 71, here's the 10-year treasury yield, down 0.4% for the week. Of course, nice rally the last several months off that big demand zone, ABC. Chart 72, here's the daily. So been consolidating here. It's still holding that 20-day, so it needs to break the 20-day, guys, to have more of a pullback. Otherwise, it could just consolidate and rebound again. Obviously, that'll affect the market. Chart 73, here's TLT, 20-year bonds, moves opposite to rates. Again, still downtrending, still unable to have a symmetry break. So all bounce, the bigger bounces have all stalled symmetrically. Chart 74, TMF, that's a triple ETF, or for TLT, it's a leverage play. I'm long a little bit of this, but again, it's a risky play. I got to stop at the low there. It really needs to close above this 9 EMA, but I can count 5 waves down potentially with some active diversions, so that's why I took a shot. But again, it needs to really clear this 9 EMA. And finally, here's the yield curve. As you know, the yield curve was inverted the longest in history. It is no longer inverted, but it is pulling back again pretty good. It's now, the ratio is 1.01. But I still think this means a recession is coming, guys, because it's been the best predictor, and it was inverted the longest in history. So Trump's got his work cut out. He'll likely be blamed for the recession, even though it was already in place, set in motion. Next, chart 76, a high yield corporate tends to follow the market, or market tends to follow it. Bounced off that demand zone recently, but just like on the S&P and NASDAQ, unable to take out that recent high as of yet. Now let's move to crypto Bitcoin. So here's Bitcoin. It hit a high of 99,770. Almost tagging that 100,000 number, round number. I still think you could say this. You could say, is that close enough for government work? Possibly, but I really think it needs to tag the 100,000 area. Just, it got so damn close. But this wave count we've had has played out beautifully. We identified that wave 4 pullback in July into that weekly demand zone. That's what we called, and that was an awesome call. All right. Here's another count. So this could be in a wave 5 of here, or it could be a wave 5 of 3. If that case is, Bitcoin's still got a lot higher to go over the long term. But likely you're going to see a correction soon, especially at that 100,000 mark. Next. Chart 78, here's the daily view. Again, hella move up out of that pattern. You can see pulling back close to that 100,000 area. The 9 EMA is below. Again, this is quite stretched. The ETFs have done well. Congrats if you've been in these puppies. IBIT. Again, hella move off those out of that pattern. And of course, the leveraged BITX, that percentage move has been well over 100% from that pattern break. Congrats if you've been in those, seriously. And here's a look at Ethereum. They popped out of this little flag pattern last week, pulling back a little bit this weekend as well. And Dogecoin, Elon's coin, essentially. Really, honestly, this one, piece of crap. But it is rallied with this, and with Musk so visible now, not surprised to see this thing, go up a couple 100%. Again, not my favorite crypto. On chart 683, here's one of the crypto stocks, MSTR. Had a hell of a rally here. Big sell-off on Thursday, though. Again, if you were in that, hope you took some profits up there. Then it's bouncing a little bit at the 9 EMA here. I'm not going to show all the other crypto stocks. So let's go and move on. Let's look at the currencies. Here's US dollar, which, again, the dollar's had one hell of a rally off that identified 5th wave divergent low we pointed out back in September or October. You see that? Perfect wave, 5th wave low, MACD divergence, and boy, the dollar has been a screamer. Formed a flag, rallied, formed another flag, and a rally. And there's still no MACD divergence. Very strong. Here's the ETF UUP. Now there is a little gap, shooting star doji. Maybe that marks a little high or not. We'll see. But you don't see that on the dollar index, so I just shown you this. Chart 86, here's the dollar on the weekly. Again, hella rally off that big support I had identified. Nice rally up. It's into a little resistance zone here. If it can clear this, there's kind of free air until you get to the next supply zone up here around 109.50. And here's the bigger picture. The dollar, had a little head and shoulder top back in 2001 and 2, then it had a big decline, bottom in 2008, and it's been uptrending since 2008 technically. Some of the other currencies, still monitoring the Japanese yen, FXY. As I pointed out, I can count 5 waves down in the daily, but I don't know if the fifth wave is in. So I'm long this with a little stop right there at the dotted line. Again, if I'm stopped out, no big deal. But again, for this to start rallying up, we need the dollar to pull back, which is still quite strong. Now let's look at precious metals, gold. So here's gold, weekly chart, up 5.5%, big recovery, recovering all last week's losses. That said, you can see gold, how it launched out of this base. This would be potentially a wave 3 high. This would be a wave 4 pullback. I have the labeling mixed up here. Apologize for that, but this would be 3, 4. That said, is the wave 4 done or not? I mean, technically, this is only 3 weeks. That last wave 2, was 3 or 4 months. So I would expect this to take longer than this. So I'm still watching for potential lower high, but anything goes here. Chart 90, here's another chart just showing that potential wave 3 of 5 we've been showing, wave 4. Again, this is why, even though we've had a huge recovery, there's still a possibility we can form a lower high with wave 4 not being complete yet. I'm looking at time symmetry, guys, because if you look at this, the wave 2, which is where this would be relative, lasted from March 2023 to October. So that is April, May, June, July, August, September, October, 7 months. So is this really done in 3 weeks? I mean, just from a time perspective, wave 4 doesn't have to take 7 months, but you'd at least expect it to take, 1 or 2 months and 2 or 3 months, and it's only 3 weeks. So that's the only thing that bothers me, but clearly a big rally up. Chart 91, here's the daily chart. This kind of shows you what I'm talking about. If that last high was a wave 5 of 3, then we could still form a lower high, come all the way down, make a wave 4, and that's the time to back up the truck. Again, markets like to, they do a good job about tricking you, so maybe this unfolds in another way, or if this goes back to the highs, it's something else, but still a potential option. Chart 92, here's the daily chart. Again, heck of a rally off that low from a couple weeks ago. It's closing right around the 61 fib. So that's an area to watch to see if we get a reversal or not. Again, you had some doji candlesticks down here. We expected a rally. Your evidence was the 60-minute divergence on the 60-minute time frame. Let me show you that. So here's the ETF GLD. You can see the nice MACD divergence on the 60-minute time frame. So when I'm looking at daily charts, guys, I almost always zoom down to look at a 60-minute chart if I like the daily chart, just for confirmation. Otherwise, you can see really nice rally up here, really one wave up. Notice there's an open gap above, so that could be a target. And chart 94, here's UGL. That's the leverage ETF. Congrats to anyone who went that. Same thing, up around the 61 fib, but a nice percentage move from $90 to 100. And chart 95, here's the bigger monthly chart. So far gold is still down 1.35% for the month. But again, under these wave counts, this bull market in gold is far from over. Next, chart 96, here's silver. Again, silver had a perfect rally off the 61 fib a couple weeks ago. I call that the master fib, kind of like a wrapper. So that's always a good area to watch for reaction. So far we've got a bounce off there. And of course the monthly chart, still down for the month. Again, long term, I'm expecting silver to go much higher as well. All right, moving to the mining stocks. Chart 98, here's GDX. So up 7.8% for the week. Nice bounce. But one thing you'll notice, guys, here, look how far GDX is from its highs, where gold is retraced 61.8. This is not even retraced 38%. So the stocks are lagging here relative to gold quite a bit. Chart 99, here's the daily GDX chart. Again, perfect bounce off the 200-day moving average, 50% fib, which we expected. We also filled this gap. But again, This is lagging relative to gold overall, which has retraced quite a bit already. So right now we're on his 20-day moving average. You can see the channel. In the 50-day, that's other resistance areas. Jubber 100, here's the 60-minute view of GDX. Broke out of this channel. We did have a bullish symmetry break, so I am looking for a higher low when this does finally pull back. Here, we still haven't filled this gap above. That's probably an immediate target. And notice there's some other gaps above as well. Jubber 101, here's the symmetry slide. Again, not going to go over this in depth here, but you can pause it and read it. But again, when you have a symmetry break after a downtrend, usually the odds favor a higher low on your next pullback. Jubber 102, here's the BPGDM trading system. It's still technically on a sell signal, even though GDX has bounced back. Remember, it had gave a great sell signal up here in the overbought territory. All right, guys, let's move into the final part of the newsletter. We're looking at 45 minutes right now. Let's talk about our trade ideas. First off, AZ, Smart Technology. That's the smart cart. Steve and I posted a webinar, weeks ago when it was down in the mid $2 range, and it has had a hell of a rally. Congrats to anyone who bought this. We didn't mean this to just, we talked about at the time, this is a long-term fundamental play of ours. It wasn't meant for a, short-term pop, but for those of you who may have bought this in the 250, 70 range, if you still hold it, you've done extremely well. You're up, close to 300%. Congrats. This chart looks really good. Great volume off the lows. Next resistance is around the 750, 60 area. So we'll see if we can tag that. I'm hoping to see some nice news on here, maybe in December. We'll see. I'd love to see some major retailers like a Walmart or something in the US. That'd be great. And chart 104, here's the 60-minute chart. Late last week, I pointed out this little ascending triangle pattern. You can see it started breaking out of that on Friday. Some other charts, chart 105, here's Tesla. That's obviously done well. Recent bounce off its 9 EMA here. And take a look at the bigger picture chart. Here's the weekly chart. You get a nice ABCDE bullish coil. And honestly, Tesla is not too far away from its all-time highs. Chart 107, Microsoft. This is still really lagging. Let's keep an eye on this. If this starts to break this support, that could be an issue for the market. Still holding it for now, though. And we have some great ideas here, guys. Our actionable trade ideas per week. Here's Datadog. Like my comments here say, good doggy. We had as a long idea back here when it was at resistance, around 132.50. Congrats if you bought it. Nice pop late last week. Look at that volume. Great trade. Chart 109, Starbucks. Now this one's been choppy. I've had it on my list for a few weeks. But if you stayed patient with it, with the swing stop here, it's now starting to work out, as you can see. Swing trading, guys, you got to be patient. You can't be reacting to noise, all right? Chart 110, UNFI. Nice coil pattern that has played out beautifully. Congrats on that. Love those coils. Chart 111, AFRM, nice weekly base, nice breakout the last couple weeks. This was given to me by one of our subscribers, Arun. Great move here, looks good. Chart 112, Rocket Lab. I mean, man, this has given Elon Musk a run for his money. Look at this move. We had it as long ideas back in here, and man, this puppy is. We had it as a long idea back here in the fives. It's now 23 bucks. Chart 113, JVA Coffee. It's been on our long list. Had a little pop last week, pulling back, but ultimately I still think this works higher. Okay, this is your bullish labeling, ABCDE. Chart 114, MBLY Mobley. Been patient with this as well. It's been working up. My target's filling that gap above. Chart 115, ECVT. Beautiful long trade we had back in October. Gave you a great trade filling that gap. I said it was still in play. Potential flag here. Looks like it's trying to trigger. We'll see if we can get a pop to that next unfilled gap. Now you got the 200-day moving average first to contend with. Chart 116, FND. Another long idea from last week. Nice pop from that 105.40 area. Nice follow through on Friday. Charter 117, HUBG, another one from Wednesday, starting to break out here a little bit. And guys, here's some Charter 118, PAYO. This is a little breakout play. It's still hanging in here, so it's still valid. Now here's some new setups. Charter 119, Intel. It's potentially flagging here, so one to watch. Oh, by the way, the target would be up here on a breakout, filling that gap around 28.50. Charter 120, NNE, another nuclear type uranium type play. Nice breaking out. I didn't draw any trend lines here, but I like the volume patterns. There's no divergence intraday, so this one could follow through. Charter 121, ACHR. Here's a weekly chart coming out of this long-term base. Good volume. That's your first resistance target area, 750. Charter 122, APLD. Nice long base. Again, this is a weekly chart. Nice volume patterns. Resistance right in here. You know, a good breakout here could send this puppy up to the, 16, 17 area. Charter 123, PLL. A lithium play, good for the EV type plays. Nice little pattern here. A breakout could send it up to this area. Charter 124, UEC, that's uranium. Nice resistance breakout right here. Good volume patterns. And the final chart, 125, comp. Here's another long idea. So there you go, guys. We will see what happens here this week. By the way, quick check on futures. This is this weekend betting futures. It's not real futures, but it's this betting, hedging, whatever. They're showing a possible positive open on futures, so we'll see if that's the case later this evening when futures open. And that's it. Again, everyone have a great Thanksgiving week. I'm sure some of you are traveling. I thank you for all your support. All of us at Breakpoint Trades, Steve, myself, Rick Kwan, Sarah, etc. James Rowe. Have a good rest of your Sunday. Take care.